Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. Weren't with you last weekend because Hurricane Helene had other ideas. The mountain cabin is up in western North Carolina, so unless you've been under a rock, you know what's been going on here over the past week. Personally, very fortunate that things weren't worse, and heartfelt thoughts and prayers going out to those that are dealing with far more dire circumstances than no cell phone service and other things we've been issuing here are dealing with here. And thanks to Elon, because Starlink works pretty well. It has been. So as you see on your screen, what we do each and every week is show you the stocks that will be featured in this recording. And as a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, so let's go ahead and get to the charts and talk about what's going on in the markets. First of all, some economic data to talk about. Today, we had the big government non-farm payrolls report that came out, and it was much better than expected. Now, normally the skeptic in me would be, okay, we're approaching an election and looking at a government jobs number right before the election, and it comes in much better than expected. I'd be like, is that really true? But it is on top of the ADP report that came out this week as well, which is the private jobs report, and it was showing better than expected jobs market as well. And wages are going up. So the jobs market is still okay. And then we had a big bounce in the futures. And then the market started to think, well, wait a minute, if the economy isn't that bad, although we have seen some signals on the economy not doing so well, are we going to get as many rate cuts as we think? So let's take a look at where we are in the charts. And I've got a really convoluted chart for you. And this is going to bring the ire out in some of you Elliott Wave technicians, if you will. Always talked about at ewotrader.com. The way we pursue Elliott Wave is from a trader standpoint. Don't claim to be the greatest Elliottician as far as labeling every single point here and there. But there's a pretty significant pattern that I do want to talk from a general nature about. But when we take a look today, you can see we open higher, and the bar right now, I'm going to spread it out just a bit so you can see this. You can see we're trading off the highs again, as I think the market's like, well, wait a minute, are we going to get as much easing as we thought? And I also wanted to point out that in the prepared remarks for Chairman Powell in the 50 basis point rate cut meeting, he did look at the camera and say, but we're going to continue to reduce the balance sheet. I didn't think we were going to get 50 basis points. I thought 25, but now I understand why, because reducing the balance sheet is quantitative tightening, as one of you pointed out in our last recording. So kudos to that. And so now it makes sense on why they went 50. So they're easing on one end and tightening on the other. So they're kind of balancing things out a little bit, which is kind of what I thought going into an election is where we're going to be. But what I wanted to show you is this big pattern. I'm going to take some of this stuff off so that we can see it later. But within Elliott Wave, and this is where I said this is going to draw the ire of some of you Elliott Wave really technical people, is it looks to me like we have a bit of a ending diagonal forming here in the wave 5. It's close enough. Now, it's not exact. I give you that. So if you're one of those that are so intent on getting every single pattern labeled exactly properly, it's not exact if you go by the letter of the law on an ending diagonal, but it's close enough that I think we need to pay attention to it, especially as we're at the midpoint of the wave 5 tap box. So let me go ahead and take all this off, all these zigzag patterns that have to be within an ending diagonal pattern. So as I remove them all, you can see just the general nature of the pattern setting up there. And so regardless of whether it's an ending diagonal or just some consolidation moving into the point of the wave 5, it bears watching. And when we talk about the rest of the market, what's concerning me at this point in time is the fact that not only do we have this narrowing pattern, give it that, if you don't even want to call it an ending diagonal, we also have issues in the bond market. So let's take a look at the TNX. And I don't understand the way the bond market is acting right now. It doesn't make sense to me. So we're moving up in yields and rates. Why are we doing that if the Fed is moving into a easing cycle? You would think rates would be coming back down. So that's the 10-year, that's rates. Remember on the TNX, it shows rates, but then we switch to the TLT because I know a lot of you like that. That's pricing on the longer end of the curve. Look what's going on today with pricing. So pricing is moving down. Remember, pricing and yields move in inverse proportion. So if prices are going down, yields and rates are going up. What's going on here? Why are we going so far to the upside on rates and down in prices if we are moving into an easing cycle? It doesn't make sense, and I think it gives us something to be concerned about. I know there's unrest in the Middle East. There's all kinds of other things to worry about. Let's take a look at the dollar while we're talking about what's going on globally. And I saw yesterday on the financial networks, they were talking about how impressed they were that the dollar was hanging in there rather strongly. And I look at this chart, and it looks to me like the dollar is hanging on by its fingernails on the edge of a cliff. One of the analogies you've heard me use a lot as it's holding on to this 161.8% extension to the downside. Looks to me like the dollar is getting ready to come down here to that next line of support at 99. So I don't get that viewpoint either. And that concerns me as well. We can't lose the dollar. And if we have all this unrest in the Middle East, you all know what's going on, et cetera, and yet the dollar isn't stronger than what it is now, that's concerning to me as well. So there's a definite disconnect between where the equities markets are and where the bond markets are at this point in time. Now let's take a look at the VIX, and that's significant as we have moved back above the 20 level. And I had talked last time we got together on how we had broken back below the 17.5 level. Maybe we're going to come back into this 12.5 to 17.5 range, but it hasn't really been that, because if you go back to mid-July, 15 has been the low. We haven't been past 15 to the downside since mid-July. So the trading range has been more between 15 and 17.5, and you could certainly make an argument that it's more like 15 to 20 now is where the trading range is on the VIX. So it's an elevated VIX. I don't think that's that surprising moving into an election, but it's something to keep an eye on. And in the world of trading options, that's what you want. The one word that any options trader would ask for in the markets is volatility. That's all we ask for. We don't care what direction the market goes. Just want volatility. Just want the markets to move. That's the beauty of trading options. Doesn't matter which direction. All right, so let's take a look at some of the rest of the markets. The DIA, which had been performing better and still is outperforming just recently the S&P. We are holding ever so slightly, but holding above the 10-day moving average, and that would make sense as there's market rotation. If there are concerns about a recession, and it did look like before the jobs report today that we were getting some weaker economic news. We had the port strike, and how much that was going to affect the economy. That seems to be over with this morning. And by the way, at the time of this recording, it is during market hours, so the pricing could change slightly after the close. So again, we are doing this during market hours on Friday. But for now, the Dow is holding above the 10-day moving average and seems to be pretty constructive. It's pretty easy to see where the support level is here on the DIA. We just need to watch this 420 level. If we can hold here, all good. And if we don't, we still have some support there at the previous wave 3 high around 415. That's your corridor of support to look at on the Dow. The Qs hanging in there pretty well, better than I thought they might with what's going on in the bond market. Really kind of surprised that we haven't given more back to the downside on the Qs with rates moving up, but so far so good. We are having trouble breaking out of this A-wave impulse in this zigzag pattern. We got above it. We didn't have any follow through or confirmation, so back down. If we can hold this level and break above and get above this A-wave impulse with follow through, then we could be good to go to the upside on the C-wave extension. But we have to do that first, and so far we haven't. We are holding above the 10-day moving average, as we are on the Dow as well. So I'm a little surprised that we're doing as well as we are on the Qs, but we're not out of the woods yet. We've got to get above that A-wave with follow through. And then looking at the IWM as an indication of risk on, risk off, we came all the way down yesterday, touched the 50-day moving average on the low, right to the midpoint of this new trading range between 205 and 225 here on the IWM. As you know, if you've been watching, the IWM tends to like 20-point ranges. So we're sitting here right in the midpoint at 215, bounced up today and trading right around the 10-day moving average today. So doing okay with the majority of the markets today. It seems like every market is outperforming the SPY, at least at this moment. Again, things could change into the close. Now let's move into crypto land. If we take a look at Bitcoin, just when we got above 65,000 and we're trying to hold there and thinking, well, if we can just consolidate here a little bit above 65,000, maybe we can make another run at 70,000. Nope. Here we are, boom, boom, right back to 60,000. Now we're trying to see if we can hold 60,000, because if not, we're probably headed back down to this support around 55,000 that you can see held back here in July, in August, in September. So if we don't hold 60,000, it looks like another attempt there. And then as we look at Ethereum, which we always look at Ethereum with Bitcoin, a lot of you have Ethereum. We needed to hold above 2,500, as I mentioned, couldn't do it. Back below 2,500. Now can we hold this level here at 2,250? So in crypto land, we're trying to see if we can hold the lower levels. We had broken above the levels that we wanted to, 65,000 on Bitcoin, 2,500 on Ethereum, lost them both. Now we're seeing if we can hold those lower levels, see what happens from there. Now let's move into the metals. When we take a look at GLD, and by the way, interesting story here on GLD, as you can see, is performing well on TradeFinder this week. And TradeFinder, if you're not familiar with what that is something that we do every Tuesday at 1 p.m. Eastern time. It's free. You can register with the link you see on your screen. We talk to markets, we look for trade ideas, and we have a live Q&A. It's a fantastic community. They all talk back and forth and then ask great questions. So what I did this week in TradeFinder, where I normally give a case study consideration, so yeah, there is a potential trade in each and every TradeFinder. Click on the link and join us this coming week. This time I put it to a vote, and I let the community at TradeFinder pick what the case study consideration was going to be. I narrowed it down to 3 different options, and they picked GLD. So that was the group thing. So I thought that was pretty interesting. So taking a look at GLD, holding above the 10-day moving average, consolidating this upward move nicely. I don't think we're done with GLD moving to the upside either. So I would tend to agree with our community and TradeFinder that move up towards this wave 5 in the middle of the tap box here is likely warranted, at least 250. I would think that we're going to move. But this consolidation following a little bit of a vertical move and separation from the 10-day moving average, I think is very constructive with all the unrest that's going on around the world, the geopolitical stuff, in addition to the Fed moving into supposedly an easing cycle. You would think that GLD would do better. And then we have SLV, which is performing really well. As you can see, this movement to the upside here. And we hit 30. And that was our case study consideration last week. Not this past week, but the week before. And we've hit the target level, 30 today. So we'll be taking that one off. So we had back-to-back weeks in the metals. SLV before GLD this week. And so hitting that target on SLV, and some of you commented, I made the comment that SLV was lagging GLD, and he said, yeah, SLV can catch up quickly, and it has. Still not quite where we are with GLD, but yes, SLV is making up ground rather quickly, moving to the upside there. And then let's take a look at natural gas. And boy, natural gas has gotten our attention. It's pretty interesting. I've been talking about this one quite a bit in TradeFinder as well. We moved above 15. I really like this 45-degree angle that we're moving. It's not one of those vertical moves. The problem here is we are in a very qualified 5-wave to the downside pattern here in UNG, and you can see the wave 4 is right at a 50% corrective move. And so for today, we're down testing the 10-day moving average. If we can hold the 10-day moving average, break above this wave 4, and disqualify this 5-wave to the downside pattern, you've got a pretty nice move, I think, all the way back to 20 on UNG. You can see the move from 20 down to 15 just was kind of a straight down move. So there's no congestion or consolidation in the way on the way up. So if we can get above this wave 4, hold the 10-day moving average, I think you have a bullish trade there on UNG. But let's do that first. So for now, it's a wait and see on where we go from here. And then taking a look at oil, USO, you know what's going on in the Middle East, and that's put a bid back underneath USO. Right now, we're just a touch overbought. I actually was hoping to see a little bit of a pullback here because I would have sent out an alert on USO to our alert subscribers at evotrader.com. We're already overbought from the 10-day moving average. Clearly, we're moving back here, as you know, if you've been watching corrective triangles within Elliott Wave once the breakout occurs. So we had this symmetrical triangle. We broke to the downside on USO. You go back and you test the point of the breakout. And clearly that seems to be where we're going on USO, especially buoyed by the unrest in the Middle East. So 77.5 seems to be in the cards. But I was hoping that maybe we might come down and test this area here around 73 or so before making that run up. I can't chase these moves where there's too much separation from the 10-day moving average. You've heard my rule. No security in any time frame gets too far from the 10-day moving average. Maybe you miss it. Maybe it runs right to 77.5 without coming back to the 10-day moving average, but it won't move much further than that because things just don't get that far away from the 10-day moving average. So we'll see if it gives me an opportunity to get in. But I do think that's the point to look for, 77.5 on USO, and then we'll re-examine where we go from there. Now let's talk about stocks of interest, and NVIDIA is certainly a stock of interest right now with this big, huge triangle that it's in. And by the way, just as a quick reminder, each and every month this year, we're giving away one of our level 3 subscriptions absolutely for free. And it includes our time strategy, which is a sideways trade, an income-based trade. It's not looking for big home run trades, just good, consistent income type strategies, calendar spreads, time spreads, butterflies, that type of thing. Also, our volatility strategy, which is triangles, a la what you're seeing right on the screen with NVIDIA. And then also our AI-based impulse strategy, which primarily focuses on trading zigzags within the Wave 3, and then has AI, which has been an unbelievable track record of accuracy. Took 2 winning trades off this morning before doing this recording from our AI impulse strategy. And given one of those, all of those portfolios combined together, which we call level 3, for free each and every month this year, is worth thousands of dollars. You can go to our website at evotrader.com and see what the price is. And all you have to do to be involved in the drawing for the giveaway is leave a comment under this video. Comment on anything that you want that we're talking about. Just leave a comment and you're automatically registered. Now let's get back to the chart on NVIDIA. And you can see this triangle pattern. Something of significance is going to happen with NVIDIA. I don't know if we're going to the upside or the downside. We don't have a 5-wave Elliott wave pattern. We're just in a massive corrective move here on NVIDIA, which I find really interesting. But you can see the bottom of the triangle here, and you've asked this before, how do you know how far a triangle is going to break? You go from the mouth of the triangle, the low to the high, and that price range is what you expect from the point of the triangle. So if the point of the triangle, call it 120, and we're looking at, say, 95 to 135, it's a 40-point move. And now it doesn't have to happen within a week or two, but some sort of a significant move is coming in NVIDIA in the not-too-distant future. And perhaps it's a trending move that takes some time to play out, but it's going to be a significant move. So I look forward to seeing that. And then I do read each and every one of those comments that I said, hey, just leave a comment. And some of you mentioned that looking at symbols, and I read each and every one of your comments. I answer as many of them as I can, time and travel permitted, hurricane permitted. And there was a comment that as far as USO with oil, they like to look at UAE, United Arab Emirates, and Qatar as far as an indication of what could go on with oil. So obviously looking at the Middle East. Now, maybe these charts are having some effect because of the unrest over in the Middle East. But when you look at the chart of USO that we just looked at, we're moving to the upside here. We're moving higher. But we're not seeing that same type of movement here in charts of UAE and Qatar QAT. A little bit of movement down. Now maybe we reverse and head back to the upside here, but I think there may be a little bit of a disconnect from what's happening with oil, with how much unrest do we get in the Middle East? How far does this go? I think will be interesting. Another stock of interest that I wanted to bring up, it was on the news today. I don't normally look at these lower dollar stocks. I know some of you like to look at them from time to time because of the volatility, but Spirit Airlines, which we know has had its problems with the failed merger with JetBlue, but now they're talking about how they've had to ground a lot of planes because of engine problems. And gosh, all the news has been coming out of Boeing, et cetera. And we'll take a look at the chart as a bonus on Boeing here in just a second. But big move down here. The Spirit is blowing this off, but there's possibility of filing for bankruptcy. And then you hear the stuff about having to ground planes because of engine problems. And for someone that flies a lot, all this airline stuff, I'm not a white knuckle flyer. I actually enjoy flying, but you start thinking about all this kind of stuff. And then Boeing breaking below 160, which is what it needed to hold. Now we're down to 150, and we seem to just be creeping lower. I don't know where the bottom may be on Boeing. It's not in a five-wave to the downside pattern either, so it could turn at any point in time, but it's got to get back above 160 before you could even consider looking long Boeing. How far down do we go? Not sure. And then we'll wrap things up this week with INDA. It had been bucking the trend, as you know, internationally, and it's just been a stalwart on its move to the upside. Every time it's had a little bit of a correction, it's turned and moved back to the upside. It loves testing the 50-day moving average. You go all the way back to springtime, keeps testing the 50-day moving average and holding and moving back up, and we're doing it again, testing the 50-day moving average. So the question becomes, is that all this is? We're just testing the 50-day moving average again on the INDA, or is it over? I mean, one thing you have to take a look at is that wave 5 is awfully extended at 212%. You've heard me say it before. I haven't seen a wave 5 or a C wave and a zigzag extend more than that, but a handful of times in 27 years of doing this, 3 years in trading Elliott Wave. So this is unusual to see an extension that far, and at some point it is going to run out of steam. We don't know that yet. We'll have to keep an eye on it. But what I do know is that if we can't hold 57 here, right around the 50-day moving average on the INDA, we're probably coming down to 55. That would be the next level of support. So I need to keep a close eye on the INDA over the next couple of trading days. Good to be back with you. Thanks for watching. As always, have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.